Hello everyone and welcome back to Explain the Charts. Today, we are doing an emergency in-depth analysis of Ethereum, symbol ETHUSD, on what is turning out to be an incredibly volatile day, October 14th, 2025. We have some absolutely shocking price action to cover, but first, let's look at the news and sentiment leading up to this moment. Over the past week, headlines have been dominated by what was then considered a significant flash crash. Reports mentioned massive liquidations across the crypto market, with some analysts pointing to short-term profit-taking and a failure for ETH to break the key $4,800 resistance level. There was talk of ETH dropping 7% and leading to over $600 million in liquidations just a few days ago. Analysts identified a key support zone between $4,250 and $4,400, with some suggesting a dip to these levels could be a healthy pullback before a rally to new highs. Despite this short-term weakness, long-term sentiment remains strong, citing institutional interest like Grayscale's ETH ETF and significant whale accumulation. So, the stage was set with a battle between short-term sellers and long-term believers after a sharp but somewhat expected correction. Now, let's turn to the charts to see how this played out, and I promise you, what happened next was not something many were expecting. Here on the daily chart, we can see the broader picture over the last several months. After a massive run-up to nearly $5,000 in August, we saw a period of correction and consolidation. Now, let's zoom in on the action from the past week that the news was discussing. Here on October 10th, you can see this massive red candle with a long lower wick. The price opened the day around $4,370 and flash crashed all the way down to a low of $3,500. This was the carnage everyone was talking about, a violent shakeout that tested a key psychological support level. However, notice how buyers stepped in aggressively, pushing the price all the way back up to close the day at $3,859. Following that event, we saw a strong recovery over the next 3 days, with the price climbing back steadily. On October 11th, 12th, and 13th, the market seemed to be confirming the buy-the-dip narrative, as ETH recovered all the way back to close at $4,244 yesterday. At this point, it looked like the worst was over, and bulls were getting ready to re-challenge the mid-$4,000s resistance. Everything seemed to be following the script of a healthy correction. But then, today happened. Brace yourselves as we look at the full chart again, including today's candle for October 14th. As you can see, there has been a catastrophic breakdown. Yesterday's close was $4,244, but today's candle opened at $2,466. This represents an almost unbelievable 42% gap down overnight, completely shattering the market structure. The price blew straight through the $3,500 flash crash low without even pausing. This move is an order of magnitude more severe than the correction that was making headlines just days ago. We are now trading at levels not seen since February of this year. The entire uptrend that began in the second quarter has been completely erased in a single night. This type of price action signals a major, fundamental shift in the market, far beyond simple profit-taking. The prior support zone between $3,500 and $3,800 is now a massive, seemingly insurmountable wall of resistance overhead. Looking back on the chart, the price has found some initial footing in the $2,400 to $2,600 range, which acted as a consolidation zone in late 2024 and early 2025. If this level fails to hold, the next major historical support area sits way down between $2,100 and $2,300. Let's switch to the 1-hour chart to analyze today's intraday action more closely. We don't see the gap here, but we can see the sheer cliff the price fell off of at the start of the new daily session. The drop was relentless, cascading through stop losses and triggering liquidations on a massive scale. After hitting the low of $2,442, we can see a bounce has been underway for the last several hours. The price has fought its way back above $2,600, showing some signs of life and buyers stepping in at these deeply discounted levels. However, the volume on this bounce has been substantial, but it's still being met with selling pressure. This is the very first, tentative attempt at finding a bottom. The immediate challenge for bulls is to establish a clear support level and prevent another leg down. Any failure to hold the lows of the day will signal that the selling pressure has not yet subsided. Short-term resistance on this time frame is forming near the intraday high around $2,650. Now, looking at the 15-minute chart for the most recent price action, we can see a battle unfolding. The initial bounce off the lows was very strong, but the momentum has started to wane. We are seeing lower highs and higher lows, forming a tight consolidation pattern in the last hour. This suggests the market is pausing to digest the massive move before deciding on its next direction. A break below this tightening range, say below $2,600, could signal a retest of the daily lows. Conversely, a strong push above the range high around $2,640 could give bulls some short-term confidence to continue the recovery. Traders should be extremely cautious here, as volatility remains exceptionally high. The news about negative funding rates from a few days ago is now even more relevant. While that initially suggested a potential for a short squeeze, this catastrophic drop may have trapped longs instead, who are now being forced to sell, adding to the downward pressure. So, to recap the extremely critical situation for Ethereum. In the short term, the trend is violently bearish following the overnight collapse. The long-term bullish trend is now in serious jeopardy and is arguably broken. Key resistance levels to watch are the intraday high around $2,650 and, much more significantly, the prior support zone between $3,500 and $3,800. Key support levels are the daily low at $2,442. If that breaks, the next major area is between $2,100 and $2,300. Now for some potential scenarios. The most likely scenario, with about a 70% probability, is continued bearish price action or consolidation at these low levels. The technical damage is severe, and it will take a long time to repair. A break of today's low would confirm this path. There is a 25% chance that the price forms a solid base in this $2,400 to $2,600 range and trades sideways for days or weeks as the market finds a new equilibrium. And there is a very small, maybe 5% chance of a V-shaped recovery. This would require an immediate and powerful catalyst and immense buying pressure to begin filling that massive gap overhead. A sustained move back above $3,000 would be the first sign of this unlikely scenario. The most important thing to watch for now is an explanation for this drop and whether the daily low at $2,442 holds as support. Please exercise extreme caution in this market. This content is for informational purposes only and is not financial advice. Trading cryptocurrency is highly speculative and carries a high degree of risk. Always do your own research before making any investment decisions. Thank you for joining me for this urgent update from Explain the Charts. Stay safe, and we'll see you next time.